Hello, everyone, and welcome to this session. I nearly said Forex session. Must be a bit demob happy at the moment. This is the last one before Christmas, and in fact, we've got Ella Fitzgerald coming over the airways at the moment. What's she singing, David? It's a Christmas song. Yes, well, it's wonderful. We've got to get in the mood, as it were. Anyway, sorry. I've been very frivolous here. Thank you so much for taking the time out to come and join us today. It is actually the last webinar of this year, because obviously we've got the holidays coming up, and we are always very grateful to have so many of you take time out of your day to come and spend it with us. It's absolutely lovely, and we enjoy doing these sessions, and we hope you enjoy them, and we hope that you learn something, which is much more important. But before we start, can I just draw your attention to the disclaimer that I know you can see on your screen? As you know, trading can be a very risky business. So please don't ever think of using money that you cannot afford to lose. So I think we're probably going to go slightly over that we normally do today, because there's a lot of stuff that I want to to cover. Also go back and just bring a couple of things up to date of stuff that we've done in previous sessions. So do bear with us. I don't think you will find it a waste of time. So, but before we go ahead and do that, and I know I don't always do this, but in case this is the first time that you have come along to one of these sessions, very quickly, we are going to obviously look at charts, predominantly in fact, it is all the US markets. It's stocks. We've got the indices, and I don't think we've got time for commodities today. So it's stocks and indices, and the chart analysis that we use is based on the concepts of volume price analysis that are covered in my book that you can find on Amazon. This is the foundation book, if you like. It's the complete guide to volume price analysis, and everything is there. It's all on Amazon. There are complementary books that cover the other markets. There's one on cryptos, there's one on binary options, and there's also one for Forex. But the fundamental chart analysis is all based on a VPA. And to go with the book, there's also a book with worked examples, because it was I'd had so many emails from traders and investors saying, yeah, we get the concepts, but can we see them applied to charts? And this is the one that covers the stocks, the indices, and there are some commodities as well. And you can buy it as a box set, which is a digital box set on Amazon. And the principles of volume price analysis, in case you've not seen the slide, I haven't put it up for some time now. It's kind of your foundation methodology for approaching a chart. It is based on the work that was done by Richard Wyckoff, and it is, the book acknowledges that. We've kind of taken it and tweaked it and done bits and pieces to it, and it is also an evolving methodology, because we're looking at it, we're revisiting it, and we've got some other ideas for the methodology as well. And that's something that is going to come up in the coming months, and certainly for 2022. But the foundation, the bits that will never change, as it were, it's volume, it's price action. We use candles and candle patterns and support and resistance. And once that's on your bare chart, if you like, the support and resistance you have to draw on, in some way. You can do it manually, or you can use indicators. You can use the moving averages, you can use the Fibonacci. We have our own indicators that we've developed to help us mark these really important areas on the chart. So those are your primary tools, and then you add your indicators on top, whatever you like to use. You like MACD. I've actually been looking at the MACD lately. I've come across a trader that I'm kind of in correspondence with, and he uses it very successfully. And I was looking at it to see how it would work with VPA, and certainly if I've got anything to report, I will happily share that with you. And then also then you put your proprietary indicators on top of that as well. We call them secondary indicators, not because they're second best, it's simply because your primary tools are the ones that you have down here, and you use them, they complement each other. And overarching all that is we've put time. Now here time is not just the time frame that you are looking to trade, but multiple time frames. And the use of multiple time frames is absolutely essential to all trading, even if you don't use volume price analysis. And there's been a fantastic example of that on the Tesla chart. In fact, there's a post about it on my site, so you're happy to go and look at it there. But I know David is going to cover it in more detail when I pass over to him. So there we are. How do I want to start? As I said, I have a laundry list of stuff here that we would like to cover with you and share with you. I suppose really the thing to do is to do a very quick roundup of what's happened with the FOMC yesterday. I mentioned last week this is the last meaningful trading week of the year, and we had the FOMC yesterday, we had the BOE today, and we've had the ECB as well. Now, the Fed was really interesting because I actually wrote on my Forex page on Facebook that I think the Fed would give a sort of mixed message. And we all, if you were watching the charts, you all know what happened. You could see that in the indices and in the US dollar. In fact, I'm going to use the US dollar as an example because it's, let's see if I can find it. Where are we? Here we are. Excuse me. I used this chart this morning in our Forex session, because it really encapsulated, this is the 15-minute chart, but you've got these volatility candles across the time frames. And essentially what happened was you had the statement, and the statement sort of said, yeah, we've got some interest rates. Their interest rates are going to increase next year. There's, they have something called the dot plot, which kind of gives you a kind of roadmap of what they intend to do. And things, the market behaved as you would expect. Rising interest rates, although I do accept we are at a very, very low base. So an increase from 0 point whatever it is by a tiny amount, as the BOE have done this morning, may not be earth-shattering, but you have to remember the context of these increases. And if you recall, if you were with us a few sessions a few weeks back, this is the most over-leveraged market, in the sense that people are just borrowing vast sums of money to pour into the market on the assumption that it is carrying on to the moon, as it were. So even a very small move in interest rates could actually, upend that quite dramatically. So people are over leveraged in all sorts of other different ways. So we had that. If we look at the candles, so this was the first reaction. Yeah, it went up, then it went down, and carried on up, and then the dollar actually started to fall, and the indices, they kind of said, yeah, okay, well, we know interest rates are going up, but somehow in Powell's press conference, the impression he kind of gave was, well, yes, but we know inflation is going up. The word transitory, I believe, wasn't used about inflation, but yeah, we're keeping it on the back burner. Yeah, these interest rates have got to go up. We're also tapering, and the market took that to mean, oh, great, the party is going to continue. Now, I appreciate that's not till next year. There's plenty of time to party between now and then. But the reaction was not what you would expect. But come this afternoon, because as we've mentioned before, rising interest rates, the sector, the stocks that really don't like rising interest rates, and we've mentioned this many times before, is the tech sector. And lo and behold, this is what the Nasdaq futures are doing, or did yesterday. This was the move higher, and bang, they have come completely. They've come off completely today, and to me, and to David, obviously to us, they are reacting how you would expect from such an FOMC. It's as if they the reality is beginning to sink in, and I think this reality is going to hit this market more and more as we move towards the end of this year. Also have to remember we are in this seasonality, Santa's rally, all got to end up on an upbeat note, as it were. But there's enough within the market, internals, market breadth and market internals, which we haven't covered, but we will do later, to suggest that it's the shop window may look glitzy and shiny and full of shiny baubles, but actually what's going on behind is not so clever. And also the VIX, well, the VIX is 20, as we said. 20 is this kind of key number. If it goes up dramatically from here, then beware. And the S&P's come off 20. The YM is holding up, but then you would kind of expect that, because that's the kind of more value index, and we talked about the components that make up these indices, the weighting that is given to each individual stock in the index, and how some stocks, because they have a heavy weighting in an index, they are like bellwether stocks. They're the benchmark stocks, and if they start losing, then the whole index is going to it's going to struggle, basically. And if you're a futures trade, if you trade the indices, and many traders do, you can even trade them. Those of you who come along to Forex will know you can trade them on MT4. I mean, I've got and it's you don't have to have a margin. You don't have to have a huge deposit to trade the futures on an MT4 account. Where have I got here? Have I got the NQ here? There we are. So Nasdaq, where we are. NAS 100, here we are. This is a synthetic contract, but it tracks what the index is doing out there in the real world, as it were. And we can see here, and in fact it's identical to the futures contract in terms of what the chart looks like, and the candles and the levels and what have you, that I have on my NinjaTrader. Now, I've got the 30-minute chart here for a very particular reason, but if I move to the daily chart, you can see here, we've got the volume point of control. This was yesterday. This was the volume that went into it, a reasonable amount of volume. We've got a tail to the bottom of this candle. And in fact, it did go up, as we can see here. Buying did continue overnight, and certainly this morning was certain. But come the open this afternoon, we go down to the 30-minute. We have, this is how it ended yesterday, up, up, up. Then you had the move into the Asia Pacific session, and it kind of, as you can see here, it drifted up. Support and resistance lines, hugely important. These levels that I talk about, the R3, I refer to, you will hear us refer to this as Camarilla levels, but they're much more like pivot points, because they are based on, the indicator is based on the old floor pivots that traders and investors still use, and this is a very, very important level. Now, I said I have a question that I need to answer. I've had some screenshots. I don't think the person is in the room today, so I'll just send him a link to this, to the recording, where basically he couldn't understand why on say a 30-minute chart, you see this, you see all this level, all this volume squished down, and then suddenly you have this this inrush of volume here. Did this invalidate volume price analysis? Excuse me. Excuse me, seem to be losing my voice today. And the answer is no, because this is the physical open. This is when the market actually opens in the US, which has the the deepest participation and liquidity, and this will inevitably squish all this volume down. But when you are in the when you are on a faster time frame, if you look at the 10-minute or the 15-minute chart and just have that portion which covers this particular session, these volume bars will look, you can read them in conjunction with the candles at the top, but you will always get this, if you like, distortion of the appearance of the volume. But as I said, it's because we have this huge inrush of volume at the open, because it's the, it is the physical open, and this is the I said this is the future. This is the March contract. So it came off here, massive amount of selling, and next question is, you reverses off this hugely important Camarilla pivot point. The third level is the most important, goes all the way down to the third level at support. In fact, it barely pauses there. There was a bit of buying coming in here. You can see that because there's a tail to the bottom of that candle, but clearly not enough, and we've had a really nice little waterfall. And this is where support and resistance comes in again, but this is from the perspective of volume support and resistance. This is off the volume point of control. It's that zone on the chart that is it's where we've had a lot of transacted volume, and it's been in a congestion. And if we turn to yesterday, we can see here, this is how it was built up, both pre FOMC, but also pre-POC and actual OC. So the market was happy to transact around this level. And what happens as it was building, you see every time it hits a level, this is the accumulation and distribution indicator, these sort of hatch lines that thicken. What that means, that's price based, so that every time it hits it gets thicker and thicker, and it becomes stronger and stronger. And when it did break through, you can see, you can tell the amount of volume that was needed to actually force it through with momentum. And we had momentum because we had the volatility candles, but it was certainly enough to push it. But that was the amount of effort that was needed to break this very, very strong resistance line. Now, what happens with resistance is when the price comes back the other way, it acts as support. Now, it's now a very strong support, and it's also supported again, excuse the pun, by the volume point of control itself, which is this yellow hatch line. And so, the NASDAQ, the NQ rather, the futures, is having, it's got a bit of a cushion, as it were. Is that going to be enough to move it, to reverse it again? Well, usually when it comes down to these, where you have a price, a strong level of price, and you've got the VPOC as well, really what tends to happen is you can expect a certain amount of sideways movement. And what we want to see, a little bit more volume than that if this is actually going to carry on higher. So that was my question there. Now, to move back to the indices and the stocks that make up the indices, there's two things I want to mention. Hopefully, I don't think I've got the actual. I don't think I've got the actual data, so I'm going to have to tell you. And essentially, in fact, let me leave it on the chart, which is far more interesting for you to look at. And in fact, I'm going to put up BMY, which is Bristol Myers, because we looked at stopping volume, and the stock has moved absolutely beautifully. Let me just move to the daily chart on this one. If you came along a couple of weeks ago, we talked about stopping volume, and it brings me on to the average volume for stocks, etc., etc. But just want to finish up on the what I was going to say about the indices, right? This is just some stats for you. The US markets have this year have actually outperformed everything. They've outperformed every other market out there. You know, money has just been pouring into the US stock market, and I think it's outperformed the other markets by well, the Morgan Stanley, I think one of the indices, by something like 11%. But within the US stock market, in the S&P 500, there are 10 stocks which have actually stormed ahead, and they've outperformed by something like 28%. And we're talking about weightings. They have big weightings in the index, that is true. But when you have a market of 500, you know, thousands of stocks, and the S&P have 500 stocks, and 10 of them are the ones that are responsible for most of the move higher, you can see that when we are going to come to a point where some reality is going to hit this market in terms of what the Fed is doing, interest rates, and also what the virus is still doing to economies and is likely to continue to do in the foreseeable future, it would, whether you're a trader or an investor, it would probably be a good idea for you to be aware of what those 10 stocks are, keep them on your radar, and keep an eye on them if you like to trade an index, because if they are turning down and, you know, look a bit weak and a bit sick, then you can, you know, it's like the canary in the coal mine, as it were. And the 10 stocks are fairly, you know, fairly obvious. It's Amazon, Microsoft, United Health, Apple, Google, Tesla, JP Morgan, Nvidia, Facebook, or Meta, whatever it is, and Berkshire Hathaway. So, you know, 10 stocks. I mean, it's really quite extraordinary. Does that mean as if you're a day trader of stocks, maybe in the small caps, you know, you're not going to find trading opportunities? No, I'm not saying that at all. But what I'm saying is this: if the whole market is going to hit a brick wall, and it will hit a brick wall, I can't tell you exactly when at the moment, but I will, you know, in the coming weeks and months, when we've done a little bit more work on cycles and other bits and pieces as well. You know, the day of reckoning is coming. At the moment, it's, you know, that's postponed, as it were, because it's Christmas coming. Those are the 10 stocks that we really need to watch, and because, as I said, they will, you know, if they start turning down, then things are going to be very, very serious. So if they perform badly, everything else is going to turn down, and it will also affect, if you know, we've talked about it before in the options market. There's been this huge inrush of retail traders who just buy calls all the time. That's all they buy. They don't look. They don't have any other strategy. They buy long calls. And if you come along to one of these sessions because you want to know more about chart reading, the charts will reveal the volume will certainly reveal to you what is going on, but it's useful to place that in the context of what is happening in the broader market. And there'll come a time when, you know, just buying calls is not, you know, is not the you know, the be all and end all for your strategy. I've talked to before, and David has as well. We are putting together a stock program. It's like everything else that David and I do. Is, you know, we start off on a very sort of say, yeah, we just have to cover this, that, and the other. But the more we look at it, and we say, yeah, it's going to be, you know, we're going to make it the most comprehensive that there is out there, but not only comprehensive, but easy to understand and easy for, you know, either whether you're a complete beginner or you're already in the market and you know a little bit and you just want to, you know, put everything together into a coherent narrative. So that's what I was going to say on that one. Right, what was I going to say? Volume. Right, okay. Bristol Myers Squibb. We looked at it. We looked at the concept of stopping volume and topping volume, and the reason we call it topping and stopping is exactly that, because stopping comes at the bottom of a trend and topping comes at the top of a trend. And one of the reasons we looked at volume we looked at, you know, from FinViz, it was something that caught my eye when the topic came up, was the sheer amount of volume that was going into certain stocks. One of them was Bristol Myers. There was 25 million went in. I think it was about 3 weeks ago. Carnival, CCL, 60 million. Clover, 34 million, and a company called DAL, 20 million. And I was just curious. I thought, my goodness, when you see these massive numbers, you really, you do have to go and check them out, as it were. So, and it hasn't happened really since. I've looked, I keep an eye on FinViz so we can see kind of where the money is going into, and that's also suspicious because price is going up in the indices and what have you, but the kind of volume that is going into, apart from one or two individual stocks, I mean, we can see here ADGI, suddenly 97 million has gone into that, and you look at Apple and you think, okay, 65 million. Now you think, oh, they're two big numbers, but you have to bear this in mind. Is 65 million, is that typical for Apple? Is it high? Is it medium? Is it low? Because there is a statistical element to volume as well, which will also help you to determine whether what you're looking at in terms of the volume bar is, is that high, is that kind of high, medium, low. Also, if 65 million is, supposing it were high for Apple, because we have the pre-market, and not everybody, trading the pre-market is just, to be honest, it's for day traders, is, in my opinion, is a complete no-no. The cost, it's just forget it. But what the pre-market tells you is what has been going on in the pre-market can give you a clue of what is likely to happen in the actual market. So, for example, if 65 million were on the high side, but in the pre-market, say a good percentage of that has already been chewed through, what does that tell you? What does that tell you about the price action that you are likely to see happening in the actual market? Probably, if it's typical, so I'm just talking very general terms here, possibly not a lot is going to happen. So, if Apple is your preferred day trading stock, you think, oh, great. Now, the converse of that is, if Apple if that's on the low side, 65 million going through, we say, well, that's nothing. Probably, maybe there's more to come. And it gives you a sense of a completely different trading environment. That's what. So you can use volume in so many creative ways. Now, looking at this company, Adagio Therapeutics, my goodness, 97 million. I don't know. I'm just looking at the volume numbers. And I look at the chart and I can see here, the mother and father of a shooting star, it went up to 80, went all the way down. There's a big gap down all the way down to 10. Strikes me, it's a classic, what we call pump and dump type stock. It broke out, as you've got some congestion phases. You can see you've got, I can't move actually, let me just take that down so you can see it there. There we are. Right. You had, what did you have? You had gap downs, efforts to rise, consolidation, gap downs, a bit more consolidation, and then you had this. Now, I think, let's have a look at that one. If you can barely see the volume underneath it because it's all distorted by this, this massive amount that's under this candle. So clearly, at some point, there would have been a piece of news and what have you. Oh, great! Everyone would have jumped in on it. Wonderful. You went from $21 all the way up to $52, $53. You double your money. Then the next day, even higher. My goodness, it touched 80. But then what happened? Straight all the way back down again. How many people are going to be trapped up there? Thinking, great, it just saw this, don't understand what candles mean. They just look at a price and they think, great. say classic pump and dump, that this would have triggered a volatility, that would have triggered a volatility as well. Okay, then this is what's really sneaky. It then moves sideways. You've got a couple of dojis. I'm being a market maker here, because with volume price analysis, you've got to see this from the, you're an insider, right? Forget what people on the outside how they're seeing this. You see it. You know, is this were you, you know, controlling this stock, what would you do? Right, okay, well, we've scared the pants off of everybody, but we don't want to scare them, you don't want to shake them out, you know, don't scare them too much. So we move it sideways for a bit, you know, give them a little bit of hope that, oh, okay, well, I know it's come down to 46, but I'm really still believe in this stock. And then bang, and another one. And you know, the overriding emotion when something is going down, and if you're in a position, is hope, because you hope that it is actually going to turn. The overriding emotion when something is going up is fear. You're fearful, that you think, oh God, gosh, I hope it stays up there. Oh my goodness, you know, you're not hopeful, you're fearful. And this is what the insiders and the market makers do. And then what do you have? Some, you know, some piece of news, bang, all the way, even lower than when it was ramped up. Now, you may think I'm unduly cynical, but you know, this is what 20 odd years of looking at charts and you know, and trading and investing has done. And now we've got, you know, 97 million coming in. We shall see. To get back to Apple, this idea of trying to get some notional statistical look at you know, whether 65 million is high, medium or low for Apple. It's actually kind of medium. I think the 30-day average for Apple is about 98 million. I've been trying to find a site that doesn't charge an arm and a leg, where you can get this kind of information on stocks. I'm waiting to hear on the costing of it. And again, because this is something that we will have to look at as part of the program. And then I stumbled across dear old Yahoo Finance. So once you have that figure in your head, you can kind of see, oh yeah, you know, what's the average, what's the volume, what's the average volume. They have it down at oh sorry, this is Bristol Myers Squibb, I do beg your pardon, let's put Apple. In fact, Yahoo Finance. You can do this with all the same. Yeah, volume. The average volume is 90. They've got 87 so far. It's 84. So it's kind of doing already what statistically you would expect. So, you know, I know we're coming, you know, we're not long off the end of the session. So it's been on track. And you could think, well, is there anything, you know, what more is going to happen today to Apple? Possibly not a lot. And what you do is you go and look at the chart of Apple. Has it reached maybe the volume point of control? Is it going into a congestion? Is it, you know, that's done, it's done for the day, that's fine. Maybe there's a bit of aftermarket activity going on. Certainly if there's going to be you know, earnings after the bell, etc., etc. Yeah, fine. But do you see how you can use volume in so many creative ways? I haven't got the Apple chart up at the moment because I've actually got Bristol Myers Squibb, because as I said, I just want to carry on to finish talking about stopping volume. So the average volume on Bristol Myers is 13 million. It's done 10 million so far, you know, and you think, I do appreciate we are at a particular time of the trading day. I mean, something like this would be of, you know, perhaps a little bit more appropriate or more useful to come in, you know, maybe an hour after the open, and you know, you look at the average volume for that, you know, for a stock that you're interested in trading, and you look at what it actually has done, and you look at the two figures, and you look at the actual chart itself, and you think, oh great. And you know, if you're day trading, you think, you know, it's done for the day, I can just shut my machine down and off I go. So to get back to Bristol Myers, If you remember, this was the stopping volume that came in. We wrote about it. You can catch up on the analysis on the chart. Did exactly what we thought it would do. Then we had the volume point of control here, and also these very strong levels. As we see, they acted as support. They will then acted as resistance. It paused. Volume was still going in. You had these very compressed candles, so there's certainly, you know, the price was trying to hold up, but it certainly wasn't enough to push it through. It did actually pull back, as we can see. We've got a down candle, but nothing of huge significance. And this is where we benchmark, because if you look at the range of that candle and the volume under there, and you look at that candle with the volume under that one, well, you've got substantially more. You know, if you use that, if you take that as your benchmark, that can kind of tell you, well, that's not really going to go very far. It's just, you know, yeah, it could be profit taking. You don't know. People coming in at 53, you know, bailing out. You know, I had a fantastic quote from someone that I get a newsletter from, and he was sort of saying the way he looks at stocks. He says, I look to date stocks. I don't want to marry them. So if he sees a move and he's happy with them, he takes it and he says, yeah, you know, I'll go and date another one, which I thought was a really nice way of explaining the two different approaches to stocks. He just wants to date them. He finds a move, he's happy, he then moves on. But if you were in this and you were thinking, no, I'm going to wait till this breaks higher, look at the volume that has actually come in and has taken to move it from the volume point of control past this very, very, very strong resistance here, which now acts as support. And on it goes. It's also coming up to a low volume node as well. So all in all, from this signal down here of stopping volume, this stock has really, really, you know, behaved beautifully and followed the, you know, what we did. You know, it's VPA 101, if you like. We also looked at CCL, which was Carnival. This is obviously affected by you know, the travel restrictions and the stopping volume we saw here. This was 60 odd million, huge amount of, but you know, yeah, it found some support. More, there must be buying in this candle as well, because it's also stopped at a volume support. But really, this is being impacted by what is going on with the restrictions that are impacting all our lives due to the pandemic. And then what I did finally, just as a matter of interest, I went over very quickly to Market Beat and had a look at Bristol Myers, just to see, was, you know, suddenly everyone's Bristol Myers, it's, you know, this is the one to be in all of a sudden. Just to look at the headlines and, you know, what's happened, and they're all very, very positive. What have they done? They've gone into some mega 920 million deal for a cancer drug. They're in some hookup with a German biotech company. So their dividend is going up. So it's all looking positive. But look at the date of all this positive news. This is the 14th of December. When did we look at it? We looked at it 2 weeks ago. You know, so this is what volume of VPA can do for you. It can give you the heads up, if you like, on, you know, what possibly could be coming along the line, not just from a technical perspective, but also from a fundamental perspective. And finally, I'm going to stop. Before I pass to David, what I'd like to say is, this is just very generally, I said this morning, I said the world feels as though, you know, we're all in a massive sort of psychotic breakdown here, because our lives have been so impacted so dramatically by this pandemic. But David and I feel, rightly or wrongly, that this is, you know, although we're 2 years in, this is really not the end. We may be sort of in the middle of it, and it's just, you know, it is horrible in so many different ways. From a market, you know, a stock perspective and a market perspective, and, you know, yes, inflation, there's, you know, we talk about interest rate rises, and there's a lot of negative stuff around there, and it's very hard to see positives. But the positives that are possibly going to come out of what we are going through at the moment will also be those positives which will provide opportunities for us all, not just from a stock perspective, but how they will impact our lives. We know about electric vehicles, and we mentioned them with Tesla, this move to more sustainable, renewable energy. There are two sectors that you may, as I said, you may want to consider. The first is the pharma. And if you think about it, whatever you think about the vaccine, whatever your political views about vaccinations are, just set them to one side. The technology that has come through the mRNA technology, I'm talking about the technology, I'm not talking about the vaccine per se, has massive benefits for delivery of drugs for cancer, etc., etc. And if you want an example of what I mean, if you go on a history site and you look at World War II, yes, World War II gave us the atomic bomb, but out of this terrible experience, you had the beginning of the flu vaccine, you had penicillin. Many years ago when I was a little girl, I was, you're not going to believe this, I am getting on, but I'm not that old, but penicillin only came to my village in Italy, a long time after the war started, and I was actually one of the early people who got it, and without penicillin, I wouldn't be here today. Jet engines, blood plasma transfusion, electronic computers, radar, etc., etc. So from horrible things, good things, stuff happens, even from wars. And I'm a bit of a soap on a soapbox here. Dreadful wars, Afghanistan, Iraq, recent ones, the techniques that medics have had to learn treating battle wounds, they translate into, people who get knifed in, at A&E in the emergency room. When we lived in London, we sort of knew people who worked in the ER, and the techniques they used to save our lives from car crashes and what have you, they were the techniques that have been, have sadly been learned under awful situations. So that is what I'm trying to say. Now, with the virus as well, so we have all the technical, the pharmaceutical things, but there's also, if our lives are going to change so dramatically in terms of how we of how we work, how we live, we are going to be constrained because travel is going to be restricted. Then we are going to look at how education is going to be delivered. We use this webinar system. This webinar system is probably, going to be replaced by something that doesn't even exist at the moment, but will exist in a couple of years' time, perhaps using the technology of the metaverse. And whatever you think about Zuckerberg, he is moving in that direction. And the stocks you need to look at for developing that kind of technology, as I said, there's Facebook, there's Nvidia, there's Disney, there's Roblox. This all came out of gaming. Maybe this virus and its variants, which are going to come down the line, are going to affect our lives in such a way that it will, in a year's time, it will be unrecognizable. Anyway, I'm off my soapbox. That's all I've got to say. I hope you've I hope you've enjoyed what we've covered in these sessions this year. We're back next year. I'm going to pass over to David now. He's got some charts to have a look at. I hope I've given you lots things to think about. If you've got any questions, please just pop them into the chat box. As I said, it's been fantastic doing these sessions. We've really enjoyed them. So it just leaves me to wish you all a very happy Christmas and happy New Year. And we will catch up, and I will catch up with you next year. But don't go away, because I'm going to pass you to David.
Hi everybody, very warm welcome from me, and I hope you enjoyed that with Anna. I'm not going to dwell too long on the charts. There's a lot going on, but Anna's sort of pretty much covered it anyway. This is basically the workspace I use a lot. This workspace primarily because it just gives me a snapshot of what's going on in terms of the indices themselves. At the bottom, I've got the daily for the YM, the NQ, and the ES. And the top line is the 5 minute for those three. So basically the three principal indices. And again, no great surprise. We have this huge divergence in terms of bullish and bearish. The YM, as Anna said, the NQ is the one that's really suffering. There we go, just pop that up full size for you. Hugely down again. No great surprise that we've got this volatility and congestion because we're at the volume point of control on the daily chart, so it's no great surprise to see it anyway. We've got some price-based resistance here above, which has been coming into play over the last few sessions as well. So it's no great surprise. The one thing I would say is when you get days like this, I'm not trading this at the moment, but if we went on a webinar, if I was trading this, I wouldn't be trading the YM and I wouldn't be trading the ES, I'd be trading the NQ because the NQ is the one that's moving. And for those of you who know me well, and I'm sure you've heard this many times before, I have a bias to the short side. So if I have an opportunity to take advantage of that, then why wouldn't I? And you know, days when you get blood on the carpet, when everything is pretty much red, let's pull that up and make that a little bit larger. There we go. When everything is red, then the market is fast moving. And we've had just this fantastic move on the NQ. Ever since the open, it's just been, you know, one-way traffic so far. We've had minor blips, minor recoveries. You know, this is on the 10-minute chart. But you look at the volume, we've got the market trying to rally. What's the market trying to do in terms of volume? Well, the volume is falling away. Does that suggest strength or does that suggest weakness? And the short answer is weakness, because if that is going to be a true and meaningful rally, then it's got to see some rising volume and something certainly more demonstrable than that. And the other point about it also, which is perhaps a different perspective, if you will, is Anna mentions we've talked a lot about stopping volume and topping volume. When you start to see a reversal taking shape, you're either looking for stopping volume, particularly obviously in the downtrend, you're looking for stopping volume, or you're looking for two-bar reversals, which are the equivalent of stopping volume, or you're looking for a draining away of selling pressure. In other words, the momentum that was driving the move has actually diminished. The sellers have departed the market. They don't think it's going any deeper. They're out of the market, and therefore the volume is falling away under the down candle. So those are the sorts of things you are looking for in terms of a true reversal from a primary trend lower to a primary trend higher. This is what we call a secondary trend. We talk a lot about it in the VPA, in the Forex program, how to see it, how to visualize it, what it means, and how to interpret it once you're in a downwards trend, and the same is true to the upside as well. And it's one of the applications of volume price analysis, which is extremely powerful, because one of the difficulties in any trading is to actually stay in a position and hold that position for the longer term. And this is just another example. This is on a 10-minute, but it could be any time frame you care to choose. This is the trend monitor. And you'll see down here, we have yet to see any change in color on that particular indicator. And what the indicator is doing, it is basically looking at that trend, and it's trying to give you a signal of when that trend is likely to be coming to an end or when it is likely to be reversing. There is nothing yet in the algo to tell you that no, this has come to a pause point. The first thing you'll see is the change in color. It will go from a brighter color to a darker color. It could go to dark red. It could go straight through to dark blue and out the other side into bright blue if it was a true strong reversal. But at the moment, there is nothing. And that's, in conjunction with VPA, is one of the most difficult things to do, is to stay in a trend once you're in a strong position. bar none. It's as simple as that. What you're seeing on the other time frames, what you're seeing on the 15-second, you've obviously seen a bullish rally there come into effect because the trend monitor transition. Now, if you're an intraday scalping trader, perfectly tradable. You know, we've broken away, we've got some decent volume coming in here. This looks, you know, half decent trend. On up we go. The trend monitor's bright blue, fine, no problem at all. Then we come into the price waterfall. Now we're starting to transition back out of that bullish trend on 15-second into a darker color. This may go to darker red. It may go straight through to bright red. Where are we coming to? If we were going to short this now, I would suggest it's not the best time to be doing it, because the first thing that's going to happen is it's going to hit the VPOC. Now the VPOC has moved up here because we've got more volume up here. So that's now out of the way. So that's removed that barrier. We're starting to see that transitional color coming in here. You know, this 15-second bullish rally has now come to an end. But in terms of how that was translated onto the much lower time frames, you know, it's just maybe an up candle. Now we're seeing a down candle here. So if that remains as it is, then we're going to see a 2-bar reversal there, and the bearish momentum that was in play is going to come back into full prominence again. So this is not a reversal of a primary trend lower to a primary trend higher. This is merely a pause point, congestion into a secondary, and possibly out the other side back into the primary trend. But that move on the 15-second there, that is a classic. From here we've gone from primary trend up into congestion, primary trend lower. So we've got a complete cycle of price action which has occurred in what, I don't know, 10 minutes, 15 minutes, 20 minutes, something like that. So that encapsulates, you know, what a cycle is, and that's on a 15-second chart, but it could be on a daily, could be on a weekly, could be on a monthly. The principles are exactly the same. Bearish engulfing candle down on 5. We'll see how it shapes up on 10. And then obviously, once you start to see those things and you're looking for, you know, where are my levels? Where are we going to? You'd be up and down the time frames. This is on 5. Let's go and have a look on 10. Pop that one up full size. There we go. Okay, we've got a low volume region coming up here, so we could be going back down to that area again. Let's go up onto the 15-minute. Just move the chat box out of the way. Get that down there. There we go. Possibly down to this region here, and you go up to 30 and you go up to 60, and again you've got the trend monitor there, hasn't really transitioned. It's certainly not going to pick up anything like this. And the other point also about rallies, in terms of just looking at it, forget about volume, forget about indicators, forget about anything else. You're just looking at it from a price perspective. What you're also looking at is how those candles form, in terms of whether you're seeing narrowing spreads or widening spreads. And if you're seeing narrowing spreads, then again, that alone is sufficient to give you a sense that this is not a strong rally. If you're going to see a strong rally, ideally you want to see widening spreads. If you're seeing narrowing spreads, then it's weakness. And it's the same is true in a downtrend. If you're seeing a price waterfall develop and you've got the spreads are narrowing, then it's telling you that you know, the selling pressure is diminishing, irrespective of what the volume is doing. Now, it may well be that the volume that's coming in is telling you there's some heavy buying coming in, because if you're seeing narrowing spreads and you've got a lot of volume coming in, that is telling you that's buying. That's the market makers stepping into the market, buying the market, and not allowing the market to fall any further. They've taken the decision to step in and they are buying. So all the selling that comes onto the market is immediately bought, and therefore the spread of the candle is relatively narrow. Or alternatively, you get the counter to that, which is stopping volume, where the market falls very rapidly. The market makers then step in, buy, and they force the price up against themselves. And that's what creates the wick to the lower body of the candle with the classical stopping volume. But at the moment, you know, that's the picture. It's pretty bearish. It's remaining bearish, and you know, not going to change any time soon. So it's just an indicative example of the power of using multiple timeframes, what they tell you, what the indicators tell you, and as I say, using VPA and also the indicators like the trend monitor to help to keep you in these trends once they're underway. Now the other one I've got TradeStation over on the terminal to my right. Let me just go on to the stocks chart, because I've got dear Tesla here. as I said last week, you can generally reckon that there's going to be some trading opportunities on Tesla from an intraday trading perspective. That said, it has not been particularly volatile certainly over the last, let's move that up there. It's the daily chart for Tesla. We did a post, I think yesterday or maybe the day before, on Tesla. It's an interesting chart, and it's not Tesla stock traders are a very vocal. They're very vocal and very passionate about their stock. They're married to it, basically, as yeah, to use that analogy, which I think is a great analogy. They are married to it, and they are very akin to gold bugs, who really only perceive gold as only going one direction, which is up. And it's the same is true for Tesla. So they don't like people who put out analysis or commentary that suggests that perhaps the stock is due for a reversal, which we've been saying for a little while. Once we had this candle, we said we're going to see congestion, which we've now seen, and breaking out of this level, we've suggested that we are going to see a move to the downside. And where is that going to go to? Well, first of all, it doesn't look great because there's very little in the way of price-based support to prevent it falling, in other words, to provide a platform. And what I'm talking about here, yes, it's a daily chart, but this could be a 15-second chart or a 1-minute chart or 5-minute chart, whatever your time frame is. It makes absolutely no difference. You can see down here, we've got this very, very strong platform of potential price-based support. So the inverted commas good news, if you like, is that 750 would certainly be a very strong stopping point if the price gets to that level, because not only are these individual levels on the accumulation distribution indicator strong in their own right, when you cluster them in this way, and you've got two which are extremely strong in their own right, this is immensely strong. It's not unbreakable. Don't ever think that this is a concrete wall that nothing can get through, but the strength of that, don't underestimate the strength of that from a price perspective. And that's the beauty of the accumulation distribution indicator. What it does is it presents these levels. You can see you've got a very, very minor one here. This has only been tested once. These will have been tested and held multiple times, hence the reason for their strength. And when they cluster in this way, they are doubly strong. So in terms of price, there's absolutely nothing here. We've gone through this very minor level, which was insignificant on its own. And so there is nothing in the way of price to provide anything in the way of support. In addition to that, when you look at it from the perspective of volume on the VPOC histogram, and this is the other perspective of the VPOC, is that you have this wonderful display of where volume is strong or weak, where we have low volume regions, in other words, where we have high volume regions, and where we've got a low volume region which extends all the way down pretty much from 900 down to, 825. This whole area in here is just, it's like a trap door, if you will, because if the price gets down to anywhere near 900, there is absolutely nothing to provide support, and it will probably fall through that pretty darn quickly. Then you get volume starting to come in and act as potential support here at this level, just above 800, and you've got more here, and then obviously you've got this price-based level down here. So that's basically the situation with Tesla. And then in addition to that, you can see we've transitioned through into bright red in terms of the trend monitor on the daily chart as well. So it's not looking great longer term at any rate for Tesla. Intraday, it's just trading what you see on the chart. It's been heavily down most of the day. We're now moving into this very strong congestion phase. Just try and pick off some of the highlights here, but you can see it for yourselves. And one of the other aspects which I highlight a lot is when you get into these congestion phases around the volume point of control, this is on 3 minute, the yellow line, that is the point at which volume and price are in, sorry, not volume and price, at which the market has reached price agreement. In other words, there's no bullish or bearish sentiment which is driving the market one way or the other. You then get these levels on the accumulation distribution indicator of price, which form ceilings, they provide platforms, and they provide a channel of opportunity, because once you go into these channels, you just wait and be patient. That's all you need. It's just patience, 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 because once the market starts to break away from here, what you're looking at is the volume down here in terms of the breakaway candles. You're looking above to see what's in the way of it. So for example, if Tesla does break to the upside here, what have we got that's going to cause us an issue if we break away in a bearish trend higher? Well, we've got a nice low volume chunk in here, which is good. So anywhere between 945 and 955, that should move pretty easily. In other words, it requires less volume down here to actually drive the price up through this region. There's very little or there's none in the way of price. Once we've got through this red level here, once we've got a buy and hold, once we get a hold above this region, a decent hold above it, and some decent volume coming in down here, then this is going to provide, this whole area here will provide a very nice platform of support to push the market back up to 950 or 955. So from an intraday perspective, that's basically what you'd be looking at. It's just basically a question of being patient, deciding where you're going to get in, at what point am I going to get in, or am I going to wait till it gets to 945 through this area here, probably. And you're obviously checking the volume to see how the volume is doing, and you're obviously looking at the other time frames as well to see what is going on there. Also, what have I got in the way on the 1 minute chart? There's running on the 2 minute chart. Let's have a quick flick up here. Not a lot. We're getting up to the top of the node here on the 2 minute. On the 3 minute we've just done, and then over onto daily. I won't switch that back over to a slow time frame, or faster time frame rather. But that's the general principle. Obviously, it's patience, patience, patience. But breakaway trading is it's a very prescribed tactic. It does require discipline. It requires patience, because you've got to sit through this. This has been going on now in congestion for how long? We're over here, 16:20, a couple of hours, more than 2 hours. Can you be patient as an intraday trader? Well, only you can decide, but that's what it's about if you're going to trade that particular style of trading. Looks as though it's going to have a little run at that, try and break out. Stay with this for a moment. See how the volume goes. That's on that one. Let's go down here. Here we go. There we go. Are you going to jump in on that? I've got the volume switched off. The reason this volume is not building real time is because I've got so much data coming in. This will actually close on the bar. There we go. So the volume now comes in. So we've got nice volume. We've got a nice candle. No growth. There's a tiny little wick to the upper body, so nothing particularly scary there. Nice volume to that one. And we've got a nice wedge of potential support. It's always potential support. It doesn't mean it's support. It potentially is support. The price could come straight through there for whatever reason. Could be a news announcement, could be Elon Musk selling another bucket load of stock, whatever. But potentially that is where your support platform is. And the other aspect to trading breakouts, which is so clean, is that if you it gives you such well-defined areas to place your stop loss. Ideally you want to be below this lot size down here somewhere, but $10 or $15 may be too much of a hit to take on an intraday trade. So you might have to move that up a little bit. You may be coming under the VPOC somewhere. If you've got to go higher, then you're looking for the most recent candle where it reversed to. You may have to go under this one. Certainly you want to be below this red line for sure. But that's the beauty of trading a breakout from a congestion phase. It's a much cleaner perspective in terms of position and management of stop loss and so on and so forth. I just want to pull Apple over on TradeStation if I can grab hold of it. It's, believe it or not, I've had an upgrade. I literally upgraded the platform. I'm not sure I can drag it over. No, don't think I can. It upgraded just before we came on live, and I don't know what's happened to the TradeStation, but for some reason it's gone completely hitong. Yeah, I'm just trying to pull Apple over, believe it or not, but I can't actually. I'll just try and grab it if I can. No, it just won't let me pick it up. Will not let me pick it up. Don't know why. Sorry about that. No, I've got it here, it just won't drag. Will not drag. Sorry about that. Let me just change it here. We'll just update it here. I wanted to show you something there, but it doesn't matter. We'll do it here. Here we go, just wait for that to load up. I think it was on the 5 minute, but probably the 3 minute would do. There we go. Let's just change this to 5 minute. There we go. Okay. Anna was talking about earlier on about what the market makers do, and if you were a market maker, you would do it too. And let's face it, we all would. And this is Apple. Nice trap moves, volatility triggers. Drawing people in. It's the fear of missing out. It's FOMO. You see it all the time. The market snaps one way or the other. You want to jump in, you jump in, and then you're left to regret it because you get caught in a trap. And this is what happens the whole time. It's not particular to any stock. It will happen to the big ones as the small ones. It makes absolutely no difference. It happens in Forex at crossovers. It happens here at the start. It makes absolutely no difference. It is about making money. As Anna said, we've been doing this for 20 odd years. We are, as individuals, we are not cynical, but in trading, you have to have a healthy dose of cynicism to actually appreciate what is going on behind the scenes and accept the fact that fundamental data is released. It will be foolish to think that the insiders would not have early access to much of the data that is released publicly. It's a simple statement of fact. It's not. We're not. Advocating that the entire world is run in that way, but certainly as far as the financial markets are concerned, you have to have a healthy dose of cynicism, whatever you do. And we're always seeing it from the insider's perspective. That's the difference. So you look at it from the perspective, well, what would I do? And that is what you would do. You'd rack the market up, you'd get a load of punters into the market, trap them in a weak move, and then reverse it sharply. And that's all it's about. And this is Apple, so it's not. Don't think this is restricted to those pink sheet stocks that zoom about all over the place, which pump and dump. It happens in a smaller way, but it still happens in exactly the same way. In terms of blue chip stocks like this, it's exactly the same. So I just wanted to show you that again. You can see on here we've got the trend monitor. We get these little transitional color changes. It's bright red. Yeah, we get a little bit of a rally, but look at the volume. Volume's falling away here. Is this a strong rally? Not particularly, though. The spreads are narrowing. There's no great emphasis there. We've got a 2-bar reversal here. You overlay that one on that one. What does that look like? Well, it'll have a body like that, and it would have a wick to the upper body. So this is hardly a sign of strength. Overlaying 2 candles, and indeed you can do the same up here. Overlaying 2 candles is very easy, but overlaying 3, 4, 5 is much more difficult very quickly, which is why we use multiple timeframes, because you'll see it in multiple timeframes in exactly the same way. And again, this is just an example of a breakaway down to a region. I don't know whether this level was in play at that particular point. It could have been, may not have been, probably was. Come down to a level, went through that one, came down to this one, bounced off this one. We've had a little bit of a rally, but it doesn't look particularly strong. And obviously much will depend on what is going on in terms of the primary indices. That's not to say all stocks rise and fall as the indices rise and fall, but they are certainly helpful. Got rising volume here, falling price. That's what you want to see. And exactly the same way, when the market is rising, you want to see rising volume. When the market is falling, you want to see rising volume, because it takes just as much effort to fall as it does to rise. Where is this going to go to? It's going to go to the volume point of control. It's going to go into congestion here. It's unlikely to go straight through. It might, it happens occasionally, but very rarely, because at that point, you've got this great wedge of volume sitting here to bring this to a halt temporarily. Just see what it does. If it breaks away from there, goes into congestion, we'll just keep an eye on that for a minute. Trend monitor's transitioned out, this little bullish phase. Now we're back into bearish phase again. And in terms of the daily, just pop the daily chart up. Again, bearish engulfing on this one, bearish engulfing, but you can overlay that on that. You can overlay that on that as well. We had indecision in here. So we've got, market that's trying to rally, market that's trying to rally now. It's all looking a little bit weak. And again, like Tesla, if you look at it in terms of perspective of what is like to happen next, certainly if the price gets down to anywhere near 172, then 172 down to 166 is going to be pretty clean, because again, it's a trap door. There's no price-based support in there, and there's precious little in terms of volume. You've got a low volume node that extends all the way through. So the next stopping point for Apple would be down at the 166 level, where it starts to find some potential support from the volume point of control. Let's just go back onto the indices just to wrap up very quickly. Let's go with the multiple time range. There we go. There we go. So the we're back into blood red territory. We had that 2-bar reversal there, carried on down. Nice candle there, widespread candle with good volume. Nothing particularly scary. On down we go. Trend monitor has got reverted back to red throughout. Just go up onto the 15-second, one of my favorites. Not to say you have to trade the 15-second chart, but if you're learning VPA, and I've said this many times before as well, and there are plenty of platforms out there now which have sub 1 minute charts on them, it is a great way to learn VPA very quickly. We didn't have the luxury of that when we were learning. We were using printed charts as well at the time for lots of different reasons. But if you have the opportunity, get onto a sub 1 minute chart, and it will improve your skills dramatically. I can assure you, it's a bit like driving a fast car. The more you do it, the better you'll get at it, and you'll be able to make much quicker decisions than faffing around trying to decide what's going on and see all the rest of it. So there we are, we're back to nice bright red pretty much universally. We had a little bit of a blip here, but came out the other side, and really nothing registered down here, and certainly nothing registered down on the 10-minute chart either for the NQ. So there we go. That's me done. I'm going to wrap up because we've run right over time. Apologies for that. Just very quickly to highlight the where you can find everything. All the indicators you can find over here at quantumtrading.com. All the 4 platforms: TradeStation, TradingView, Ninja Trader, and MetaTrader 4.5. If you've bought anything from us in the past, I say this every week, if you've bought anything from us and it doesn't matter whether it was 10 years ago, 11 years ago when we first started, we will have you on record, we will have you on the system, and we will always give you a credit for an upgrade to a bundle, a package, a full package, or if you wanted to go on the education program, we will always give you a credit. All the indicators, it's a one-off charge, one-off fee for the indicators. It's a lifetime license, and it's covered by 24/7 support, which is literally 365 days of the year. And believe it or not, on high days and holidays, even over Christmas, we are around, and you will get a reply, believe it or not. And in addition to that, you don't pay for upgrades. We do all that for you, whether it's a platform upgrade or an indicator upgrade. You just get that thrown in as well. And if you invest in the full package, don't forget, you also get all future indicators we develop free of charge. You never pay any more. And those prices have been the same since we started on the platforms. So that we have customers going back donkey's years who've had 6, 7, 8 free indicators added to that package over the years, which it's just our way of saying thank you to you for investing with us and trusting us with your confidence and capital. This is where you'll find Anna. All the that's the Forex webinar from this morning. I think there was a Tesla down. Yeah, there we are, Tesla. That was the Tesla analysis. All the books up on Amazon in both Kindle and paperback. You'll find them all there, and links to all the various other sites as well. And finally, on the Forex program, I know we've got 1 or 2 of our Forex students here, so a very warm welcome to you, belatedly. This is the funded program, which is an add-on that we bolted on to the education program. And what's interesting about the Forex program is that we call it the Complete Forex Trading Program. We have now a lot of stock traders on there because they've suddenly come to the realization in the last sort of 12, 18 months that Forex sits at the heart of this market. And the reason it sits at it, when you think about it logically, is this. If risk is risk on to risk off, and assets are being bought and sold, then assets being bought and sold convert to cash and back out the other side. So where does that cash flow? through the Forex market. And that's why the Forex market is the hub. It is the pivot around which all the other markets, the bonds, the stocks, the commodities all rotate. And so we have a lot of stock traders on this program now who appreciate that the relational aspects, obviously there's the technical aspects as well, are all interrelated. And whilst it is Forex centric for sure, a lot of the information is common to whatever you're trading. And that's part of the reason why we are now building out the stock trading program, because we want to bolt that element onto the side, if you will, to run it alongside the Forex program. And the funding we bolted in, you're trading our money, not your money. You trade at our risk as an entry fee, but it is essentially trading our money, and it gives our students the opportunity to trade much larger accounts, up to $2 million, and in addition to that, to actually leverage the knowledge that you've gained through joining the education program, the Forex trading program. It's only available to students. It's not available publicly. You won't find it anywhere else. So that's it. Thank you very much indeed for coming along today. I hope you've enjoyed it. Wishing you a peaceful and prosperous Christmas and New Year. Stay safe, look after yourselves and your family, and we will be back in the new year. Thank you so much for coming along today. Thank you so much for coming along throughout the year. We do appreciate it. We know, we do have a lot of regular customers who come along every week, week in, week out, rain and shine. So your attendance is much appreciated. So thank you so much. Enjoy the rest of the trading year, what's left of it, and we will see you back bright and early in 2022. So see you then. Bye for now.